From Florida, Mr. Ross is recognized for 5 minutes.
Thank you, Mr. Chairman. As I mentioned in my opening, I very much believe in market-based solutions for risk problems, and I see TRIA as being a necessary evil at the time that we've created it, and I see, and based on the testimony today, I understand the significance of maintaining TRIA in place, but also understand that it's very important that we have to make a transition. And hearing from the panel today that we have a significant amount of private capital and capacity in the private markets out there is very encouraging. Now, how do we make that transition to provide more incentives and less impediments is an issue that we have to face. Dr. So, one of the things that intrigues me ever since I read your article several years ago about the nation's casino has been the use of ILSs. I mean, these cat bonds, we've used them in Florida for our Florida Hurricane Catastrophe Fund. They seem to be an opportunity of diversification and growth in terms of market share that may offer us an opportunity to make available more capacity in the private sector. You mentioned in your testimony that if terrorism risks were bundled with natural catastrophe risks such as hurricane and earthquake, the efficiency of ILS coverage for terrorism risk could potentially be improved. Could you elaborate how this would benefit all types of coverage, not only terrorism but maybe also natural catastrophe coverage?
Well, in this case, actually, the benefit was to the terrorism risk.
Right.
And I would say that the impact on the natural catastrophe coverage is relatively neutral. So,
but it wouldn't. Would you consider there would be increase or decrease or just remain stable?
No, overall efficiency in the system would be increased for sure.
Good.
By doing this type of bundling arrangement. See, I mean that's a difficulty when you isolate a risk too much on a standalone basis. Any risk. It becomes very expensive to cover.
So you combine the risks?
Correct.
Let me ask you this question. Could we, and I hate to digress on this, but I have to ask this question because the NFIP is an issue that we have to face, but could the use of these insurance-linked securities assist us in diluting and reducing the amount of premiums in a flood insurance program?
Yes.
Absolutely. Good. Mr. Driscoll, one of the things that I'm concerned about, of course, is not only incentives, but impediments to private capital. And I'm sure you're familiar with the Obama-Neal reinsurance tax that's out there that I've got a great concern over. Do you feel that this tax would limit the capacity or capability of insurers and reinsurers to take on more risk from terrorism or flooding and thus be counterproductive to our long-term plan to try to bring back or at least create a private market and reduce the size of government involvement?
Yeah, whether it's flooding, terrorism, or any other natural peril, reinsurers need to be able to pool risk to gain diversification. And any limits on affiliated reinsurance would impede global risk pooling.
Significantly.
And that, in essence, fragments group capital and would impede market development. And I think ultimately it increases consumer price.
Dr. Hartwig, and it's been talked about, in fact, Mr. Cesar, with regard to workers' compensation insurance. I mean, look, it's a strict liability statute. It requires that every employer provide it. We understand that it's backed predominantly by reinsurance and reinsurance instruments. And I think that the impact financially doesn't come initially from the occurrence of an event as to the availability and affordability of workers' comp insurance. It has to do with whether there is a market that allows for affordable and available workers' compensation insurance. So I guess my question is, and I'll go to you, Dr. Hartwig, the TRIA expires December of 2014. If it expires, what impact would there be on the workers' compensation market for availability and affordability of insurance?
For workers' compensation, I think there would be a pretty swift and a pretty significant impact. It would begin well before the end of next year, as again we're looking forward into 2015. But even some carriers might position themselves ahead of time. But you would under the expectation of a lack of TRIA protection beginning in 2015, you would expect insurers, because of this aggregation issue that they have with respect to workers' comp risk, property risk, liability risk, everything they're exposed to, they would need to pare that back in some way. They're also very concerned about workers' comp because the potential liability under a workers' comp claim is effectively unlimited. Yeah. A building has a certain value. A human life, someone who maybe is quadriplegic, yeah. It's unbounded.
Well, real quickly, and Mr. Driscoll, I've got 10 seconds. You talked about risk mitigation. I think risk management is absolutely important. What do you consider to be risk mitigation in terrorism insurance?
I think very quickly in context of property, because it's a huge topic.
Structural
I think
debate.
structurally, I think there are boundaries that could be put in place. There are security measures that are put in place. There are a variety of factors. All these things are methods to not only improve the risk, but to actually reduce the premium associated with the terrorism surcharge.
Thank you. My time's expired. I yield back.
I thank the gentleman, and now the gentlewoman from